Hopefully everyone is doing all right, having good time, and catching some good opportunities in the market this week. There has been some big decisions of the central banks, the RBNZ as well as the RBA yesterday at 2:30, and then today at 12 p.m. we had a decision from the RBNZ to cut 50 basis points. I reckon there is plenty of volatility in the market at the moment to be catching some good opportunities to catch some good trades into the moment. So does anybody have any trades open and want to share? That would be good. That would be cool. I see some new names here as well. Shak, I think I've never seen your name. Sorry if you've been here as a usual one, but I've never seen it. So welcome. Sel Gib Trading as well. Welcome. Stuart is always here. Sweets, Zodwa, Andre, and everyone else. It's good. Sweet says doing great. It's Wednesday morning here. Yeah, that's good. That's really good. Now it's Wednesday afternoon here for me. 5:07. All right, guys. So what we're going to be talking today. As always, it's Wednesday, so we're going to be looking at some trades from FinLogic's tool, the market sentiment. That's what it's all about on Wednesday. But today I'm gonna say I want to do something different because I think we had such a big week so far. You know, we had two central banks already giving us some rate decisions, and I want to talk about the RBNZ. All right, start with the RBNZ, and then of course back to normal later on. So we have two topics pretty much, and then normal, and then back to normality. So Shak says looking to buy AUD NZD, and Zodwa says I'm good. Very cold weather here in South Africa. Oh, okay. Yeah, it's been pretty mixed in Australia, at least in Sydney. Not too sure about the other areas. But RBNZ cut 50 base points. What should we trade? Should we be longing New Zealand dollar? Should we be shorting New Zealand dollar? So that's what I want to be getting up on today. And then the RBNZ recent rate cut, pretty much I'm going to give an overview. The future outlook for the New Zealand interest rates, I think that's what is guiding the market at the moment, and why is the New Zealand dollar moving the way it is. It's not about the cut, it's about the future guidance, the forward guidance that the RBNZ sort of gave to us. And then we're going to be looking for opportunities into the market with FinLogic's FinLogic's market sentiment. But as usual, for those who are new here, I always wait a minute for 5 minutes for everyone to join, and then I give it a minute or two for everyone to read the risk disclaimer. I'm going to mute myself, and then you guys can have a look at the risk disclaimer, and then after a minute or two, I will be back, and then we should start. All right, I'm back. So hopefully everyone could read it. So let me take it off this, and let's get to RBNZ. So first thing I'm going to be looking is the RBNZ. So earlier today at 12 p.m. in Sydney, just depends where you're at, but it was 12 p.m. in Sydney. We had the 50 basis point cut from the Reserve Bank of New Zealand. I'm going to send this link on the chat so everyone can sort of follow up with me. Just a second. RBNZ. Oops, sorry. RBNZ. Oops. All right. Send it. So it's on the chat. You can have a look on that, and you will be exactly on the same page as mine. So earlier today, as I was saying, the RBNZ made a decisive move to cut by 50 basis points the cash rate. Okay, that they call the OCR, right? That's the official cash rate right here, bringing down to 3.75%. And that makes, I think it's the third Yeah, the third consecutive 50 base points cut from the RBNZ. So RBNZ has been one of the most aggressive in terms of cutting the interest rates, cutting the OCR as they like to call. Okay, but it's basically the same, very very similar. Okay, it's the rate that the central bank passes on to the commercial banks. I've explained that yesterday. So if you haven't been here yesterday, luckily we have the replay on YouTube channel that you can access for have a look on that. So that shows to me that what they're trying to do, doing 150 basis points, so 1.5% cut in less than a year, is that they're trying to stimulate the economy and trying to address the unemployment concerns that they're having. Because if we look at the unemployment crisis that we're having, an unemployment crisis in New Zealand, we can see here unemployment. Sorry, just a minute. Oh, what's going on? Let me get it. Unemployment New Zealand. So the unemployment has been rising pretty quick, I would say. Let me go for here. So 2022, we had 3.2%. And then 2023, we had 3.4. So that's a 0.2% increase. 24, we had 4.4. So that's pretty much a 1% increase. And now, last quarter of 2024, so that means October, November, and December, we were at 5.1%. Okay, so that is a big deal, and they trying to cut the interest rates. What they're trying to do is they want to reduce that back to normality around 3.4, 3.2%. Okay. Now, what was the rationale behind the RBNZ decision? So there's several factors I've noted down on my notebook here that I'm going to read it for you guys. So the first one is the economic activity and the spare capacity. Oh, whoa, what's that? What's the spare capacity? What's the economic activity? Wait a minute, I'm going to explain to you in a second. The second one is, of course, the inflation dynamics. Okay, I think everyone knows what's this inflation. And third, but not last, is the global economic uncertainty that are going on for every central bank. And every central bank is discussing about that. Everyone is talking about that, okay? So first thing, let's come back there. So as I say, there's several things that made the RBNZ do this cut. And everyone sort of don't care about the RBNZ. I think you should be caring about every central bank, okay? Not only one or not only the Fed, because the Fed is, everyone looks at the Fed. No, you should be looking at every single one, right? So the economic activity and spare capacity. So what I mean by that is basically the New Zealand economy has been experiencing some subdued activity, all right? So basically it has been slowing down. And that leads to a spare capacity into the economy. They're not using the economy as they could. So they have, let's say you have a Ferrari, but you're only traveling at 50 kilometers per hour. You're not going 300 kilometers per hour. So that's exactly what I'm trying to say here with the spare capacity. And the underutilization of the economy, of the resources that they have, it pretty much makes downward pressure on the domestic inflation. And that prompts the need for monetary easing. So that was pretty smart from them. So let's say you have, as the same example, you have a Ferrari, right? Most likely your Ferrari will be fueled by only premium gasoline, right? And the premium gasoline is the expensive one. So I don't know, maybe costing $5 now per liter. Well, not that much, sorry. $3 per liter, the premium gasoline. The 98 plus something. I'm not too good on those things, but and then you fill it up with that. You spend $1,000 on that, right? To fill it up your car. If you travel 50 kilometers per hour, that $1,000 can last you for maybe, I don't know, a quarter, pretty much, okay? If you travel 300 kilometers per hour, that needs to be refueled every probably day, Okay, so what I try to explain here is that the New Zealand have a Ferrari on its hands, but they're not using it at full potential. So that makes it last for longer and makes the inflation become less in the terms on the terms. Okay, and that makes the inflation come down. So now comes the second point, the inflation dynamics. So while headline consuming price inflation remains near the midpoint of the RBNZ 1 to 3% target rate or target band, whatever you want to call, the core inflation measure is that what's most important that disclassifies the food and energy, so basically the most volatile items into the basket of the CPI, they have been converging towards this midpoint. So the core CPI as well as the nominal CPI, both of them are declining. And that's exactly what you would like to do, okay? What you would like to have. You want the inflation come down and you want the, there you go, inflation right here. You want the inflation come down. So let me grab the chart that they have. There you go, here. So 2020, there you go. Right at the back here, I think I can, sorry, let me zoom in here. That's better. So they had the inflation at 7.3% on June 2022, okay? At June 2023, they had inflation at 6%. So that is a 1.3% decline. June 2024, they had a 3.3, so that's 3.3% decline. And now in December 2024, they had a 2.2. So that's pretty good because it's on the band, it's on the target band, okay? Because if we look at here, they don't have it here. So what is the band of inflation target RBNZ? So you can see that it's between 1 and 3%, okay, right here. 1 and 3% over the medium term with a focus on keeping future inflation near the 2% midpoint. So they have reached the midpoint. So that's really good. And that's why they can reduce the inflation, okay? They have 2.2%. So that's done. That's a good one. Now, stable business inflation, they are expecting more falling between 1 to 1.5 to 2%. So there is maybe another 1% that can come down. And again, it will fulfill the movement for another rate cut. The last thing is the global economic uncertainty. You know, the international economic environment has been pretty crazy the last couple of weeks since Trump has joined us, partially due because of the geopolitical tensions as well as the trade policy uncertainties from USA. So those global factors, they have the potential to impact the New Zealand export-driven economy. Because if you don't know, New Zealand is like a very, very tiny country. It's like an island that majority of the revenue generated from that is the exportation. So we call this an export-driven economy, okay? So at 12 p.m. today, we had the release, and as we can see, New Zealand USD. Let me get it here. So as we can see, it has been an immediate, soon as the release gets out, we have this huge drop and then a massive now continuation upwards. So the currency initial negative reaction, it can be attributed to a few topics. So the first one is the market anticipation of the easing. So I've explained that many times. So the substantial rate cut signal a more aggressive easing cycle than some market participants had anticipated. So this leads to a sell-off on the currency, in this case, the New Zealand dollar, as well as the interest rates differential. So the widening gap between the New Zealand interest rates and those of the other major economies like USA, Australia, Canada, etc., they made the New Zealand dollar denominated asset less attractive. So this contributes to the currency decline. And then just afterwards, we had the positive momentum. So interestingly, because after the initial drop, the New Zealand dollar, just starts to recover. This is a 15-minute chart. So this right here was the release. So 15, 30, so 30 minutes pretty much. 30 minutes into decline. And then since 12:45, we have been seeing up move. So I think this rebound, and call that, it can be attributed to a few topics. And the first one is the investor sentiment. So, as the market sort of wants to join us, as the market sort of digests the future, the forward guidance, which indicates the potential for further easing, the investors are adjusting their positions, and this will lead to a stabilization and a slightly appreciation of the New Zealand dollar. And the second is the comparative economic indicator. So positive economic data from New Zealand is always taken as pretty good, okay? And relative to other economies, they have been bolstering confidence in New Zealand dollar, and this adds to the recovery. So we had all the economies that are not doing that great. But look, New Zealand is doing pretty well. So I think we should be looking to put our money in there. So what's the future outlook for the New Zealand interest rates? Well, I've done a analysis on that, and looking ahead, I think how do I say this word, signal? So they gave us a signal for the possibility of additional rate cuts in 2025. Okay, so but there's a big thing here. They will only continue to do cuts if the evolving economic conditions continue. So the central bank projection suggests that the OCR could reach approximately 3% by the end of the year. So we have another maybe 75 basis points cut. They have three options. Well, two to three options. The first option is cut 75 basis points straight away. That would be pretty big. Second option is do 150 basis points and 125 basis points. And the third option would do 325 basis points cut. So 25, 25, and 25. So 25, 50, 75. So these are the three options that they could do. Most likely, they won't do the 75 in once. 110% they won't. That will, Jesus Christ, that would like explode the economy. Second is, well, subsequent, if the economy allows you to do that, then okay, but definitely not on New Zealand. Second is the first highest chance probability would be 325s, and then last would be the 125 and 150. Okay. Hopefully everyone is sort of keeping up. Hopefully I'm not going that quick. So there are some factors that will influence the trajectory of the OCR, as they like to call. So the first thing is the domestic economic performance, inflation trends, and as well the global developments. I think all the central banks are looking at the global sort of perspective because it has been some uncertainty times. But anyways, the first thing is the domestic economic performance. So should the economy perform, continue to perform subdued with persistent spare capacity, the RBNZ may opt for further easing to try to stimulate the growth. If the economy continues to go, 50 kilometers per hour, if the economy goes to 300, then maybe that's not a possible option to be doing cuts, because then, it's fast paced and they're getting money, they're charging 1x and then getting 3x back. So that's pretty good. The second thing is the global economic development. So, we have so much uncertainties that like the trade tensions that can possibly impact the New Zealand, because New Zealand is a big exporter. Imagine if Trump puts 25% tariffs on New Zealand. That wouldn't be any good. I would be looking to short New Zealand dollars straight away if that news comes out. And then, of course, the inflation trend. So if the inflation continue to fall below the target, that would provide the RBNZ with much more would say, confidence to reduce the rates further and quicker in every meeting. Okay. Now, if we look to RBNZ and the global sort of central banks, the other central banks, it's very nice to do those things. Okay, so we compare one central bank to the current monetary policy stance with the other central bank. So the Reserve Bank of Australia, just yesterday, we had the reduced cash rate by 25 basis points to 4.1%. So that was 4.85, now it's 4.1. While both Australians sort of central banks are in easing cycles, the RBNZ is more aggressive cutting. So that highlights the different assessments of the domestic economic conditions. In New Zealand is much I would say much better done into the economy than Australia, for instance. Now, the Federal Reserve, in contrast, is more cautions. It's a more data dependent approach. Okay, as of the New Zealand is like, I'm going to cut. They are having a more cautious approach, I would say, and they will maintain the rates, but they're signaling that there are potential adjustments based on the economic indicators. So that's data dependent, and this divergency between those central banks pretty much shows to me that the landscape and the policy priorities are different. So there are always trade opportunities to be done with those rates differentials. Now, just to finalize, because I have a minute to finish everything, so that's why I'm going very quick. I separated 30 minutes to talk about this and 30 minutes to talk about the trades we have to took on FinLogic. So in summary, pretty much the RBNZ recent cut today is showing to us that they have a very proactive approach to sort of address the domestic economic challenges amid the global uncertainties that are happening and all the environment. But, as we saw, the immediate depreciation of the New Zealand dollar right here, this part, let me grab it, this one, okay. It's kind of complex because then we saw a partial recovery and now a full recovery. So it pretty much illustrates the dynamic between the forces in response to the monetary policy decision today. As we move forward, I 100% indicate for everyone to be monitoring the economic indicators of the New Zealand, because, as I say, if we have unemployment falling, and if we have CPI rising, and GDPs and PMIs continue to rise, New Zealand dollar will be strong. Okay, that will make the New Zealand dollar strong, different from now. Okay. So that's pretty much it from me about the RBNZ. Did anyone have any questions about that? Could I help? No questions? Okay, that's good. It means that I've explained it everything very well. So, okay, no questions. All right. So I'm back here. So I've talked about the future outlook and I've talked about the recent rate cut. Now let's look for some opportunities into the market. Now it's the exciting time, hey? Let me close all of these. So we're going to be using FinLogic's. I'm going to send the link into the chat. FinLogic's website. Done. So I've sent it so everyone can join me. So we use the FinLogic's tool called Market Sentiment. So you can just put your mouse on top of tools and then go into Market Sentiment. And every Wednesday, we analyze all of the pairs that are here. Okay, so we analyze all of these pairs that are here, and we make the decisions if we should be taking short or long based on the market sentiment. So it have signals here, right? So we have bullish signals, we have neutral signals that we don't trade, and we have bearish signals that we trade on the short side. Bullish long, bearish short, neutral, we stay out. Basically, this shows the percentage of the market that have on the short positions and on the long, and we will always be following the minority. So in this case, we have 1% shorting the CAT JPY and 99% longing the CAT JPY. Shall we long or shall we short? Well, then we would be looking to short. Okay. Neutral ones, it's always 50-50, around 60-40. So we don't want those ones. Okay. Now, let's have a look at GBP AUD. So I've got into charts, GBP AUD. So we had a trade that we took last week, was this one here. And it's still going on, but that's a really good trade. It's 1 to 4. So I've mentioned it on last Wednesday. Soon as the market breaks this level here of 142.800, I would be looking to short, and that's exactly what happened. The market broke, I shorted, and then nearly got stopped down, and then we had this beautiful move down, and we are very, very close to hitting take profit. Okay, then the next position we had was shorting euro dollar. Unfortunately, that hit at a stop loss. Why is it not here? It's supposed to be here, but that hit at a stop loss of 1%. But we're still positive with this trade, nearly around 4% around 3.5% at the moment. Now, GBP AUD is the first one, right? So GBP AUD. Okay. So you guys can access the FinLogics for free as well. Okay, you don't need to pay or anything like that. You just need to create your free account using your Gmail, and you can have access to those features. Now, GBP AUD says bullish, so we should be looking to long that. If we would like to long this trade, just, very briefly into the fundamentals, we have a cut from AUD, and they don't know when they're going to cut next. So that's hawkish from Australian dollar. And we have no cuts and very sort of data dependent UK, so BOE. Okay. We could definitely take this trade, but we just need to find a good risk to reward sort of setup here. The next would be Euro Aussie. So I will be analyzing those three first because that's the only tree we have. So to not be wasting margin or anything like that, I would be looking to analyze everything and pick one or two, or if all of them are good, to put on the portfolio. So Euro Aussie bullish as well. Let me have a look. So Euro Aussie should be looking to long that. That's pretty good. We have a pullback here. We have a pullback looking to do a continuation upwards. Maybe we can catch a reversal trade here, but not for the long term. So that's a 15-minute chart. What we could be looking to do is trade long until some of those levels. So that's one possibility. And the second possibility is staying out as well because it's a downtrend. The third opportunity is Euro JPY bullish. I wouldn't be looking to trade the JPY just because we have a lot of volatility into the market, and it has been positive volatility. So I would be looking to stay away from this pair, okay, or anything that has JPY. Now, we have those two now because we eliminated Euro JPY. So GBP AUD and Euro Aussie. What should we trade? looking at the GBP AUD, that's a 1 hour chart. We have much more space to move up. And the Euro Aussie, we don't have that much space. But for the euro, it has been pretty strong the past couple of weeks because of the sort of speculation of maybe the war with Ukraine and Russia will be stopped. So Trump had a phone call with Putin, and they've sit down to discuss to stop that war, and that will be pretty good for the euro because energy prices will be back to normal, and the economy exports will be back to normal as well, gas prices, etc. So that would impact positively the euro. So if that actually happens, euro dollar could shoot up as well as euro Aussie. So I will be looking to trade euro Aussie on the long and not the pound Aussie. So how should we approach this trade? Let's have a look at, let's zoom out and let's have a look at the market. So we have this bearish trend of broke down this bottom, continuation, but not this one. Okay, so that's a inner trend and that is a bigger trend. For a continuation, we should be looking to break this bottom here. Some people like to choose those ones. I like to choose this one. And then we have break and top here as well. And then we are on a good area. We are in a good area. If we go to the 4 hour, just to look at more backwards, not stretching too much. Let me zoom out. Okay, so we are in a consolidation and most likely we can possibly have a pullback. So what I will do is let's go 15 minutes. That's going to be short trade. Okay, short trading in terms of we won't be holding for longer. And basically, where's my long positions? There you go. So I'm going to long at market price. It would be ideally if I wait for the break of this stop. And now for deciding the stop loss price, we're going to be using the ATR. Average true range. So this one is saying 57. Okay, so 57, I will be using times 3. So we get the number of the volatility of the trend times 3, and that's 170. Okay, so 170. It's here. Yeah, that's a good trade. It's 1 to 2. It's a good risk reward. I think we should be looking to trade this one. Yeah, so that's the first trade, long euro Aussie, just for the pullback. And if it breaks already down here, I would be looking to exit the trade. But for, teaching purposes, I will be leaving the trade as it is. Now, let's have a look at those ones. So we don't watch the neutral ones. We don't care about them. So Aussie dollar bearish. So short the Aussie dollar. So let's have a look at it. Okay, Aussie dollar short. Why shall we short the Aussie? Makes sense, right? Because we're long euro Aussie, so we should be shorting euro Aussie dollar. So, but for this one, I think to be shorting that, it's not the best opportunity. Again, it would be looking to go for a short-term trade, okay? Then it makes sense. So if we zoom out on the 50 minutes, we are on a very top area. So we can get the rebound down. Oopsie. So from here to somewhere around these levels. So let me get the average true range. That's short position. So that's 33. So if we short here, 33 times 3, it's 100. Let's call it 100. Okay. And then this guy, I would be leaving exactly as it is. Okay. So short Aussie dollar, just trying to get this consolidation area, and then back to where it were before. Sorry. It's a very, should be a quick trade, shouldn't be looking to, trade for too long. But that's the second trade of the day. Then USD JPY, not looking to trade the JPY pairs. GBP USD, so let's have a look at GBP USD. GBP USD. GBP USD says short. US dollar is strong, but not that strong at the moment. Okay, so I'm not too sure if we actually should be looking to short GBP USD. And we do have, maybe not now, but we do have this box here on the top that makes a good long trade. Actually, I think I should be catching a long trade here to take profit around this level. Okay, and then the stop loss, we need to use the average 2 range indicator, this one, and we calculate 202. Oh, that's a 4 hour. Oh, okay. I don't want that. I need the 15 minutes, much better. Okay, cool. All right, let me zoom out. Okay, it doesn't let me zoom out more than that. Let's take off the indicator then. All right, that's a big, big area right on the top here. Let's have a look at it. Yeah, see, it's a huge area, but we have a smaller consolidation right at the bottom here. That makes much more sense. Get this out so we can just do this and get this one right at the middle and put in like a yellow. The period is 14 for the ATR. Someone asked it, what's the period? Shaq asked it, what's the period of the ATR? It's 14, mate. Okay, so we're very close to this target. Oh, good. We're very close to this target, so, but it's worth to take this long. I would be looking to long here, targeting this area, and let's see if it's worth price with the stop loss. So 46 now in 15 minutes. So 46 times 3, it's 138. 138 would be somewhere. $140. Yeah. So that's the trade. It's a 5-to-1 trade. It's pretty much a 6-to-1 trade. That's a good trade. Yeah, we'll be looking to long this one for now, right here. Next, we have yen again, US dollar CAD, and then 2 yen pairs. So US dollar CAD would be the last one. So let's have a look at US dollar CAD. US dollar CAD, we already are short. So nothing to do. We US dollar CAD, we are short already. So just showing that how the trade system actually works, and it's so simple to be following, right? You just need to come here every day, sort of have a look at what's going on, and then try to follow the market with that. Does euro might be due to the German election? Well, I think so many other things are influencing the euro at the moment that not the election this time will be influencing it. Yes, it will, but not at the moment. If the result comes out and there is a perception of that the not favorite will win the election, then it will start to have some impact. But now it's more like Trump and Putin are discussing to finish the war. This will aggregate into lower supply prices from Russia to Europe. So that means the gas, electricity, exports, imports, etc., will be cheaper, and this will make the euro much more favorable. Sweet says, I'm looking to short USD CAD as well. Been waiting for a pullback since the breakout. Well, I've gave you this trade last week. That's a pretty good trade. Okay, so that's pretty much it from today, guys. We have 4 trades running at the moment. We have Euro Aussie, we have Euro Aussie long, we have Aussie dollar short, pound dollar long, and Aussie dollar CAD short. Okay, so stay safe, and I will be back tomorrow. All right. So thank you so much for everyone. Hopefully you guys could enjoy today. I've thought, would be good to bring it out, the RBNZ explanation. And if you guys have any questions, please always ask me. And hopefully I can see everyone back tomorrow. Thank you so much. Stay safe, and I'll chat to you tomorrow. See you guys. Bye-bye. Jerry say, where can I watch the replay? You can watch on the YouTube channel. So if you type it up, ECY Securities YouTube, you're going to come to this page. And on this page, you just click on ACY and then go videos. And then you have here. So this is always when you see this thumbnail is the replay. So this is yesterday's replay. This is Thursday replay. This is Wednesday replay. And this is Tuesday replay. And then again, Thursday, Wednesday, Tuesday, and it goes like that. Right. Okay, guys, thank you. Have a great one. See you tomorrow. Bye-bye.